When we think of people manipulating the stock market, our minds go to big hedge funds and billionaires and men in suits. However, there is a new player in the game. rWallStreetBets is a Reddit forum made up of everyday people like you and me who have had enough of the games that hedge funds have been playing for years. The underhand tactics of shorting stocks, putting out bad news and then benefiting from that when they goes down, or taking on extra risks and then getting bailed out once things go bad. Just like what happened in 2008. rWallStreetBets is a platform made up of people who stand against this type of behavior, who are sick of billion-dollar corporations getting away with unethical business practices and then hiding away in their fancy yachts. WallStreetBets is a subreddit where the people in it discuss things like stocks, option trading, investing tactics, often in not the most politically correct way, we can just say that. They're not afraid of expressing their opinion or dropping the occasional F-bomb. A stock forum, but not for kids. So you would look at this forum on Reddit called WallStreetBets, where a bunch of people come to talk about investing, and you would think harmless. However, that is not the case anymore. This group has now got millions of people who have joined it, and they have quite an effect on the stock market. Not every stock, but the stocks that they go out and specifically target. One of the ones that they've done recently, I'm sure you're aware of this by now, it's GameStop stock. GameStop? Isn't that the video game store where not many people go to anymore because you can just buy things online these days? Yes, that's the exact stock we're talking about. And the fact that less and less people are going to these stores has caused some, let's say, business troubles for GameStop. GameStop has been losing revenue, as you can see here, down from $8.5 billion in 2018 to $6.5 billion in 2020. Earnings have been even worse. In fact, they're losing money as a company. They lost $670 million in 2019 and $470 million in 2020. They're expected to close more than 1,000 stores by March 2021. You just look at a lot of metrics surrounding the stock and it's not good. And what happens is you're getting the big greedy hedge funds looking at this data, licking their chops and thinking, I'm going to short this stock and make a lot of money. For those who don't know, shorting a stock, you make money when it goes down. However, if the stock goes up, well, you lose money. So these hedge funds, they saw what was happening to GameStop, they looked at the metrics I showed you, and they thought, let's short the stock and make some nice profits. That was the idea that they had in mind. However, the people over at rWallStreetBets, they had a different idea. In specific, someone that we're going to be calling Deep Flaming Value. His name may or may not have a swear word in it that if I use, I'll get demonetized. So for the purposes of this video, he's called Deep Flaming Value. Now this Reddit investor, he noticed the vast amount of short positions on GameStop stock. He also noticed how small the price had become. He thought the stock was fundamentally undervalued. He started sharing his opinions to the Reddit community at WallStreetBets, and eventually people started to back his idea. Some people backed his idea because they too believed that GameStop was undervalued. Some backed his idea simply with the hope of making a quick penny, but the majority of people who backed his idea used it as a way to get back at big hedge funds. So I don't know how many of you guys remember what happened in 2008. It was the big housing bubble financial crisis, right? Banks, hedge funds, and other big investors took on too much risk in the hope of making quick money, and the inevitable happened and the bubble burst. However, a lot of these wealthy institutions and those running it got away with this, and they left in their private jets and they got bailed out. The people who got hit the worst was the mom and pa everyday housing owners, the regular person. So that was 13 years ago in 2008. Now, through this amazing transformation of technology, it's allowed us to communicate with like-minded people all around the world. especially through sites like Reddit. What's happened is the regular everyday person has thought, hang on, those hedge funds who got away scot-free from what they did in 2008, I want to get back at them. If we all put our money in GameStop, these hedge funds who are shorting it will not be able to make any money from it. In fact, they're going to end up losing a lot of money if we can get the price high. And person after person started throwing money at GameStop stock to try get the stock price as high as possible. When they started doing this, the algorithmic type trading picked up on these trends, and this AI started putting money in the stock as well. It ended up being like a big snowball going uphill, where the bigger it got, the more money that got pumped into the stock. At the time of making this video, the price has gone up from $19 to $350 in just a matter of weeks. How big will it go after that, or how much will it crash by after that? No one knows. The point is that regular everyday people now have the chance to affect stock prices through the community WallStreetBets. Where previously you'd have to be a top executive at a bank or a hedge fund that is in charge of billions of dollars to affect a stock, now regular people can do this. It's kind of like a little bit of a taste where the power shifts from the giant Goliath institutional investors to the small everyday ma and pa investors. Chamath Palihapitiya, an investor who some people call the modern day Warren Buffett, he too has been following this phenomena of WallStreetBets. He said, I think that what it proves is that this retail phenomenon is here to stay. There are 4 million people inside of WallStreetBets. I think they are as important as any hedge fund or collection of hedge funds. And I think the most important thing is that in a world of zero interest rates and quantitative easing, I don't know how you can run a typical hedge fund strategy and make money anymore. Because, for example, when you looked at GameStop, a normal person would say, how can you have 136% short interest? How can you be short 40% more shares than actually exist? To a normal person, that doesn't make any sense. But to a Wall Street mathematician, that's the game that has been played for years and years, and that game has come undone. End quote. The reality is, there have been a lot of sneaky underhand tactics that Wall Street and hedge funds have played for years. And Reddit WallStreetBets is having their say against it. And surprisingly, to a lot of people, their say is actually having a big impact on the stocks that they choose to target. For years, it's been the Goliaths having power over the stock market and trading and the tactics that go on. But now we have the Davids, the everyday investors with diamond hands, starting to fight back. Overall, I think it's a good thing. I think it's important that everyday people get a say in the stock market. And instead of these huge hedge funds ganging up together on their positions, I personally quite like the idea of the everyday person having their say. In saying that, I highly recommend everyone to separate the wheat from the chaff with any investment that they find on this subreddit. At the end of the day, it does have a whole lot of new investors who have nothing to lose, who are going out and picking stocks. But on the other hand, there's a bunch of smart stock researching nerds who know what they're doing and they know where opportunity lies. The key is having the judgment to separate the two groups. Nevertheless, unless the SEC has something to say about it, it appears that rWallStreetBets is here to stay, and I like it.